Hello, I'm David Jones. Welcome to the channel if you've never watched it before. And I thought I'd do a video on stock markets. At the time of recording, Wednesday, we've got stock markets, the NASDAQ, the S&P and the DAX pushing out to fresh all-time highs. It's been a really interesting time for trading indices. It's been a good time for me, just basically trading with the trend. But it hasn't been a good time for a lot of people. And I think there's a really great lesson that we can take from trading as to why most people lose. So I thought, let's take a look at what's going on with stock markets, why people are losing, the levels I'm watching, and all of that stuff. So without any further ado, let's get straight into it. Let's start things off with just a top-down view of what's going on. This is the S&P 500, and here we are. I'm recording this on Wednesday ahead of the market open. But we are seeing it in the out of hours market moving out to fresh all-time highs again. If we take a look at the NASDAQ, let me just tidy this up and get some of this stuff off. There we go. Take a look at the NASDAQ. Again, we've seen it, presumably I'm thinking here, driven by earnings. But again, pushing out through the November highs. So all-time highs again on the NASDAQ. And even the DAX, the German market, which has been a little bit drifty since the middle of October. We're seeing the DAX at all-time highs as well through that 20,000 mark. So these markets are really bullish, and it's been a good trading period for me. You know, I've got a few trades. This is one of the accounts I use for the YouTube. It's got real money in. It's just it's not a demo account. It's not my actual trading account, but I use it for some of the YouTube videos. So I've got a mix of trades on there. And they're doing okay. If you watch any of the stuff I've done before, I've said I'm a big fan of trading US markets. I do it every day, specifically the NASDAQ and the S&P. And they've been great trends. Well, I mean, how far do we want to go back? If we look at the S&P, the run we're in now started at least a year ago, October 23. And if we go back to October 22, that was the lows after the sell-off that we saw from beginning of Jan 22. So really great markets, I think, to trade. But I wanted to look at something else. Before we get into the nuts and bolts of some trading ideas, I talk a lot about most people losing. And of course they do lose, we know that. But I think there's really a fundamental thing that most people do that means they're losing. They end up losing. And it's the perfect time to talk about it. I did a snapshot of client sentiment with a popular broker, and we're going to look at it now. Right now, let's remember S&P, NASDAQ, DAX at all-time highs. Trends clearly up, all of that stuff. So me as a trend trader, if I've got a trade on, I'm going with the trend. But what do most people do? Let's have a look. Here we go. Here's a snapshot of client sentiment. So from a major broker. So for the DAX, the German 40, 83% of clients who have a trade are short. So they're positioned for the market to fall. The NASDAQ, 60% of clients who have a trade are short. And the S&P, it's a bit more balanced, but it's still more than half of those who have a trade on in a market that has consistently set fresh all-time highs are short. People cannot trade with a trend. I know, I did it for years. When I first started trading, I was always trying to pick the top in a rising market, pick the bottom in a falling market. If we trade with the trends, it makes life so much easier. So just think about that. For most people, this won't change, and in 50 years' time, when I'm not here gabbling on about markets, the world will have changed, but I can guarantee you when it comes to trading, most people will be trading against the trend. So what we want to do is trade with the trend. So for me, if I see a market like this, let's look at the S&P, I want to be a buyer of the dip. However deep that dip ends up being. So I'm in a NASDAQ trade at the moment. So my last trade on the NASDAQ was down here from the 25th of November. And the trade went against me for a little bit. Into the 27th of November, and since then the trend has resumed. So the market has continued to move in my favour. So that's been good. But of course, what I'm doing when I'm trading with the trend, I'm trying to tilt the probabilities in my favour. If I'm going to trade a market, and again, let's stick to the NASDAQ. That has gone up for the last month, gone up for the last 3 months, and gone up all year, what are the chances I pick the top? You know, it's highly unlikely. So what I want to do is trade with the trend in that market, and that's what I've been doing. So I've had a really good few months trading these indices. So when it comes to where next, you know, I would still absolutely be a buyer of the dip in these markets. If we look at something like the S&P. So a quick commercial break before we carry on. There's a few things I do. One of them is I run a WhatsApp group. So I've been running this for how long now? Almost 2 years, and I do a morning update for a mix of different markets. Then I do a US update in the afternoon my time as US markets are starting, the levels I'm looking to trade, all of that. People in the WhatsApp group have been in there for a while, most of them. I also do a regular webinar every month just for the WhatsApp group, so there's a bit of mentoring in there as well. If you'd like to try it out, there's a link in the description down below. Go to the website, davidjonestrading.co.uk, use the code YouTube and you get 20% off the first month. Then of course there's the company I trade with. You've seen some of the bits on there. I can thoroughly recommend them. Been trading them with them for almost a couple of years now. The reason I like them, it's low cost trading. It's tight spreads. I can link it into TradingView as you've seen, so it's really easy to see where my trades are, where my orders are. And you can trade really small. And I think this is important, either if you're just new to trading and you don't have much money to trade with, which is completely fair enough, or like me, I've been trying out an additional system for trading the S&P over the last few weeks. It's gone okay so far, but I didn't want to risk lots of money when I was doing it. So trading with these guys means that I can trade very small and risk a fraction of my normal trading size. What I'd say is try them out, see what you think. Like I say, I thoroughly recommend them. The link is in the description as well. bit.ly davidtrade is how you find them, and you can open an account and try it out. Right, let's get back to the markets. You know, I've got some levels marked up on this chart. If I look at the latest leg of the trend from October last year, that trend line comes in around 5.6. So it's about, what, 400 points below where we are now, which is, it's only about, what's that, about 8%? 6 to 8% below where we are now. So if we did see that slide, that size of a slide in the market and through these old levels, then I might change my mind. You know, like back in July into August, you know, I did wonder then, oh, is this the start of a deeper sell-off? And of course, it wasn't in the end. The trend resumed and we hit fresh all-time highs here in September. So if I had been sitting on my hands then, I'd be thinking, okay, now's the time to get back in, and the market's carried on higher since then. So for me at the moment, dips are buying opportunities, you know, long term, medium term, and short term. And it's only, let's call it 5,600. If the S&P drops below 5,600, I'd start to get perhaps a bit cautious about that dip. But for now, at least, we are hitting fresh all-time highs. For the NASDAQ, let's say 19.6, the lows from October, middle of October. If it sold off through there, I'd start to think, well, actually, maybe this is more than just a correction in the market. But at the moment, these markets are really bullish. You know, I don't really think about it in terms of targets. I'll put a trade on and look to trail my stop up behind it, but I'm happy to keep on buying. When it comes to trading ideas, if we look at a really short-term chart now, this is the 10-minute chart. And this is, you know, I trade the US indices in the afternoon. I talk about the levels that I'm watching in the WhatsApp group. This has been the week so far, going back to Monday. So we had Monday lows, out of hours lows, around 6,020. The market's about 45 points higher than that. So, you know, there's a couple of alternatives for me now. I can wait to buy the dip if the market dips this afternoon, and I can be a buyer. And I'd look towards yesterday's low is one example for an area I'd want my stop the other side of, so I can just wait and click and be a buyer. Or I might think, well, actually, if the market pulls back, you know, near yesterday's low, let's say 60.44, I want to be a buyer. And it's really easy to set that order up, you know, so I can set an order to be a buyer. What did I say? At 6,044, put a stop loss, I don't know, let's say 20 big S&P points away at 6,024. And then there's my risk. And if let's say I want to risk losing £180 on that, then I'll just do 9. The size I'll do is 9. There we go. And there's my risk. So I'm going to buy, I can leave an order to buy at 6,044 with a stop at 60.24 on my risk there. And I can click on buy and place that order. And that order you can see there is sitting there on my chart. So again, this is why I like using this broker with TradingView, because it makes it really easy to see there's my order, there's my stop. And if I change my mind, I can just click and cancel it. So for me, buying the pullback is absolutely a strategy in these markets. Or of course we could buy strength. You know, we look at, it's the out of hours market at the moment. The highs yesterday in the S&P during normal trade was around 6,053. So again, I can just buy strength this afternoon and think about where to put the stop loss. Normally I wait for the market to trade about for the first 3/4 of an hour, see where it's trading, but I'd absolutely be a buyer of a dip in these markets. And it's the same really for the DAX. You know, the DAX had been sideways, so it was through October. This is an hourly chart we're looking at here, so it hadn't been as clear to me, the trend in the DAX, so it's not a market I've traded. But I think again it's interesting now, you know, if we see a market that breaks out through a previous high, and in this example the market's broken out to fresh all-time highs, you know, for me I want to be a buyer of the dip. You know, I'd probably wait and see if there's a sell-off and how deep does the sell-off go. But absolutely on the DAX, I'd want to be a buyer of the dip. It's perhaps easier for me on the S&P and the NASDAQ because we have, I think, some clearer levels to keep an eye on. You know, that's been the trend for the past, when's that back to? Back to last Tuesday. So actually, if we go back even to the 20th of November or the 19th of November, you know, the last couple of weeks, a clear trend on the S&P. So, you know, and you can see how a buying the dip strategy would work. So all I've got to figure out, and it's a big thing to figure out, is where does the stop go? You know, and it's something I talk about in the WhatsApp group I run, stops I'm thinking about. But having a sensible stop is really important. And what I want to do is trade with the trend. So I think if there's one thing to take away from this video, you know, these markets are strong. This strength might stop tomorrow, okay? But my bet is, from a probability point of view, there's a bit more juice left in the tank. So for me, I'm happy to buy the dip. But let's not forget why most people lose. And it goes back to these stats because they're not trading with the trend. So they're making their lives harder, much harder than they have to be by trying to pick a top in these markets. But for now, these markets are still very strong. I'm happy to buy a dip. Like I say, even if we had a dip of a couple of 100 points into the end of the year, you know, that's just a move in the trend. So still really bullish. Particularly the US markets. The DAX has broken out today, so that does, oh, not today, this week, so that does start to look interesting for me. And even the Russell, the small cap index in the US, is sort of threatening the old all-time high. This isn't a market that I look at that often because it has really lagged its bigger brothers, the S&P, the NASDAQ and the Dow. But these old highs that haven't been broken since 2021, so 3 years ago, these highs are. It's had a little look through it towards the end of November. And I wonder, into next year, into 2025, do we see finally a breakout for the US small cap index? Let's see how that works. But for me, like I say, my big focus are the major indices, the S&P, the NASDAQ and the Dow, to a lesser extent. And let's have a look at that. The Dow again, it's been a fairly quiet week for the Dow. But once again, yeah, the trend for the Dow has been up. You know, coming into this year, the market was trading around 37,500 and here we are just below 45,000. So a big old move in the Dow this year. So I hope you find bits of this useful. You know, for me, the key is to trade with the trend. You know, there is a very clear trend in US stock markets. We're at that time of year where we talk about the Santa rally. Traditionally, I think if the market has had a good year up until the end of November, December statistically ends up being a good month. I was reading an article earlier this week. I'll flash that up on the screen now so you can see a bit of that. I'll put the link to the article in the comments. It's something we talked about a bit in the WhatsApp group this week. You know, I use have a look at the broker I use. You know, I use them because I can just click and set up orders and trade directly from the charts. But for me, For the foreseeable future at least, my approach in stock market indices, is continuing to be a buyer of the dip. That's clearly from those figures we looked at. Let's just remind ourselves. That's clearly that's something that most people aren't doing, because they're not all, but the majority of them are trying to pick the top. But it can make your trading life a lot less stressful if you do trade with the overall trend. So that's it for today. There's still an hour and a half till the US market opens. We'll see how it opens and whether there's any trades there. I'll be back on Friday for the live stream. If it's the first time you've seen the channel, welcome along. And don't forget to subscribe, like, and all that YouTube nonsense, and you'll stay notified for any stuff I do in the future. That's it for this quick update on indices. Really interesting time, really strong markets. Where's it all going to end? I don't know, but I'm just going with the trend, and it's proved to be a very profitable approach over recent months since that big August sell-off we had. It'd be really interesting to see where markets go in 2025, but they are ending the year at least strong. Let's see how it all ends up. We'll take a look at it in more detail again in the live stream this Friday. If you haven't subscribed, if you could do all of that. Otherwise, we're done, aren't we? So like I say, to find out more about the WhatsApp group, there's a link in the description down below to have a look at the company I trade with. That link is there as well. So until the next time, I hope you enjoyed this. I hope you find bits of it useful, particularly that trading with the trend thing. Absolutely critical, because you can see the results when you don't. So until the next time, good luck with your trading.